Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today we're discussing the Bank of Canada's recent interest rate announcement and the uncertainty surrounding it. Steve, it seems like the decision was a close call, with the odds almost evenly split between a rate cut or a pause. What's your take on this?
Well, Janine, the Bank of Canada decided to keep the rate steady at 2.75%. This decision comes amid ongoing tariff uncertainties that have been clouding the economic outlook. The central bank outlined two potential paths for the economy, heavily influenced by these trade tensions.
That's right, Steve. It's interesting to see how these external factors, like tariffs, are playing such a significant role in our domestic financial decisions. The experts are saying that this rate hold might spell a status quo for Canada's housing market, which has been struggling lately.
Exactly, Janine. The housing market has been under pressure, and maintaining the interest rate could provide some stability, albeit temporary. However, it's crucial for potential homeowners and investors to remain cautious and keep an eye on the developments in trade policies.
And let's not forget, Steve, the Ontario home prices actually fell in March due to this tariff uncertainty. It's a reminder of how interconnected our market is with global events. For families looking to buy, this could mean more affordable options, but it also comes with its own set of challenges.
Absolutely, Janine. It's a double-edged sword. While lower prices might seem attractive, the underlying economic instability requires careful consideration. The Canadian Mortgage and Housing Corporation reported a slowdown in the annual pace of housing starts in March, further emphasizing a cautious approach.
It's a complex situation, Steve. On one hand, there's opportunity, but on the other, we have to be mindful of the risks. This is where guidance from experienced professionals can be invaluable for those navigating the market. Steve, with the Bank of Canada holding its benchmark interest rate at 2.75%, it seems like we're navigating through some pretty uncertain waters. They've outlined two very different scenarios for the economy, both influenced by U.S. tariffs. What are your thoughts?
It's definitely a complex situation, Janine. The Bank of Canada's decision to maintain the rate reflects the unprecedented uncertainty we're seeing, particularly with these tariffs. They've laid out two paths, one where most tariffs are resolved, leading to a temporary slowdown but eventual recovery, and another where a full-blown trade war could plunge us into a recession.
It's concerning to hear about the potential for a recession. The bank mentioned that inflation eased to 2.3% in March, but short-term expectations are rising due to trade disruptions. How do you see this affecting everyday Canadians, especially those looking to buy a home?
That's a great question, Janine. While inflation easing might seem positive, the rising short-term expectations mean that consumers could face higher prices in the near future. For potential homeowners, this creates a challenging environment. On one hand, there might be more affordable home prices due to market adjustments, but on the other, economic instability requires careful financial planning.
And it's not just about the home prices, Steve. The bank also highlighted weakened employment conditions and a slowdown in household spending. These factors can impact families' ability to make large purchases, like a home, and plan for the future.
Absolutely, Janine. Employment and household spending are critical factors. In times of uncertainty, people tend to hold back on big investments. The bank's focus on maintaining confidence in price stability is crucial, but as they noted, monetary policy can't resolve trade uncertainty. It's a balancing act.
It really underscores the need for guidance from experienced professionals, doesn't it? And looking at the two scenarios the bank outlined, there's a significant difference in outcomes. In the optimistic scenario, we see a gradual recovery, but in the severe case, we're talking about a recession with long-lasting impacts on GDP and inflation.
That's right. The optimistic scenario suggests a temporary dip in GDP growth, averaging 1.6% annually through 2027, but avoids contraction. Inflation might even dip below the bank's target briefly. However, the severe scenario paints a much bleaker picture, with GDP contracting and inflation spiking due to ongoing tariff impacts.
It's a stark contrast, Steve. The unpredictability of U.S. trade policy is making it hard to provide a base case forecast. The bank's cautious approach seems warranted, but it's challenging for those of us trying to plan ahead.
Exactly, Janine. As BMO's chief economist Douglas Porter pointed out, the deep trade uncertainty is likely to weigh heavily on growth, potentially leading to more rate cuts. By the end of 2025, most of the Big Six banks expect the policy rate to settle between 2.00 and 2.25%. It's a reminder that we need to stay informed and adaptable.
Steve, the Bank of Canada's decision to hold its key policy rate steady at 2.75% has left many wondering about the implications for our housing market. We've been seeing a sluggish trend for some time now, and this rate hold seems to keep things at a status quo. What are your thoughts on this? What?
That's right, Janine. This rate hold is particularly noteworthy because it's the first time the central bank has opted not to change the benchmark rate after 7 consecutive cuts since June. Victor Tran from Rates.ca pointed out that the current economic environment isn't inspiring consumer confidence in making large purchases, such as mortgages. It seems like the Bank of Canada's decision won't significantly alter the current state of affairs.
It does seem like a cautious move, Steve. Penelope Graham from RateHub.ca mentioned that those with variable rate mortgages won't see any movement in their payments, which might not be enough to re-incentivize hesitant homebuyers amid the ongoing tariff uncertainty. It's a tough market to navigate right now.
Absolutely, Janine. The uncertainty stemming from the US.-Canada trade war has dampened what many hoped would be a rebound year for national home sales. While some economists had predicted an uptick in activity for 2025, these hopes have been overshadowed by economic volatility.
And for those looking to secure a mortgage or renew their current one, Penelope Graham suggests seeking a pre-approval to hold today's rates for up to 120 days. This could provide a buffer against any short-term rate fluctuations, offering some peace of mind in these unpredictable times.
That's a smart strategy, Janine. Victor Tran also noted that if analysts' forecasts of 2 more rate cuts this year come to pass, we might see a pickup in housing market activity due to lower variable mortgage rates. However, the broader economic picture remains unclear and could influence purchasing trends significantly.
It's true, Steve. The bond market's volatility hasn't led to significant changes in fixed-rate mortgages yet, but rising bond yields could eventually lead to increases in fixed rates. It's a complicated landscape, and one where informed decisions and expert advice are more important than ever.
Precisely, Janine. It's crucial for potential homeowners and investors to stay informed and adaptable as these scenarios unfold. The market's current state requires both caution and strategic planning to navigate effectively. Janine, the recent report from the Canadian Real Estate Association shows that single-family home prices in Ontario fell in March for the second consecutive month. This decline seems to be a direct consequence of the tariff-related uncertainty affecting our economy. What stands out to you in this report?
Steve, it's quite concerning to see home prices dropping after a period of relative stability. Single-family homes fell 4.7% year over year, and condos and townhouses also saw declines. This indicates that the market is reacting strongly to the uncertainties, particularly those related to tariffs.
Absolutely, Janine. The decline in home prices isn't just about the numbers. It's a reflection of broader economic challenges. The U.S. tariff threats have softened the economy, casting a shadow over the real estate market. As Sean Cathcart from the Canadian Real Estate Association mentioned, the market has shifted from expecting a rebound to just treading water.
That's true, Steve. It's a challenging time for potential home buyers who might see these lower prices as an opportunity. However, they also have to navigate the complexities of an uncertain economic environment. It's a situation where careful financial planning and professional guidance become crucial.
Exactly, Janine. And while the overall trend in Ontario shows a decline, it's interesting to note that some regions like Huron-Perth and Sault Ste. Marie are experiencing price increases. This suggests that local factors are also at play, and not all areas are affected equally by the tariff issues.
You're right, Steve. It's important for buyers and investors to look at regional trends and not just the overarching provincial data. In some areas, there might be opportunities for growth despite the broader economic challenges.
Precisely, Janine. The CREA report highlights that while the volume of home sales dropped significantly across Canada, certain regions in Ontario continue to show resilience. This resilience could be attributed to local economic conditions and community dynamics.
That's a good point, Steve. It reminds us that real estate is a highly localized market. Buyers and investors need to consider both the macroeconomic factors and the local nuances when making decisions.
Janine, the Canada Mortgage and Housing Corporation released a report indicating that the annual pace of housing starts in March slowed compared to February. This is a noteworthy development considering the broader economic context.
Yes, Steve, the seasonally adjusted annual rate of housing starts came in at 214,155 units, down from 221,405 in February. It's significant because it reflects a broader trend of caution in the housing market, likely influenced by the ongoing tariff uncertainties.
That's right, Janine. The pace of starts in centers with populations of 10,000 or more fell by 2.8%, which is a substantial decrease. It's interesting to note that while the starts of single detached homes rose by 1%, the starts of other homes fell by 4%. This indicates a shift in consumer preferences or perhaps a response to economic pressures.
It does seem like there's a change in the types of homes being built, Steve. The rise in single detached home starts might suggest that people are looking for more space, possibly due to lifestyle changes prompted by recent economic conditions.
Exactly, Janine. The 6-month moving average of the seasonally adjusted annual rate also fell by 0.7% to 235,316, which shows a consistent downward trend. This could be concerning for developers and investors who are trying to gauge the market's future.
And let's not overlook the rural starts, which were estimated at 10,870 in March. This suggests that while urban centers are experiencing a slowdown, some rural areas might be holding steady, possibly offering opportunities for growth.
That's a good point, Janine. The dynamics in rural areas could be different, influenced by local economic conditions and perhaps less impacted by international trade issues. Investors should consider these varying factors when making decisions.
Absolutely, Steve. This data underscores the importance of looking at both macroeconomic trends and local market conditions. For potential homeowners and real estate investors, it highlights the need for strategic planning and adaptability.
Right, Janine. Staying informed and agile is key in this environment. As we continue to see how these trends develop, it's crucial for all stakeholders in the housing market to remain vigilant and prepared for further changes. In recent news, the Financial Services Regulatory Authority of Ontario, commonly known as FSRA, has taken a significant step by revoking the mortgage brokerage license of Mortgage Smart Incorporated. This decision accompanies administrative penalties imposed on Ranjit Dhillon and Kamal Dhillon, amounting to $40,000 and $10,000 respectively. Janine, this is a notable development in the mortgage industry. What are your thoughts on its implications?
Steve, this action by FSRA highlights the importance of regulatory oversight in maintaining the integrity of the mortgage industry. For clients and potential homeowners, knowing that there are checks and balances in place can provide some reassurance. However, it's also a reminder for mortgage professionals about the importance of adhering to industry standards and regulations.
Absolutely, Janine. The revocation of Mortgage Smart's license is a serious matter, and it underscores the consequences of non-compliance. For those in the industry, it's crucial to understand that regulatory bodies like FSRA are vigilant and committed to enforcing rules that protect consumers and ensure fair practices.
That's right, Steve. While this might be a setback for the individuals involved, it's a necessary move to uphold the trust and reliability of the mortgage sector. For clients, it's vital to work with licensed professionals who are transparent and adhere to regulatory standards. This ensures that their interests are protected throughout their mortgage journey.
Indeed, Janine. This situation serves as a reminder for both mortgage professionals and clients to remain informed and vigilant. The penalties and revocation reflect the seriousness with which FSRA treats violations, and they highlight the need for ongoing diligence in the industry.
Exactly, Steve. For potential home buyers and those refinancing, it's crucial to do thorough research and choose reputable mortgage brokers. Working with professionals who prioritize compliance can help ensure a smooth and secure mortgage experience.
To wrap up, it's clear that maintaining high standards in the mortgage industry is essential for consumer protection and market stability. As we continue to monitor these developments, staying informed and choosing the right partners in your mortgage journey is key. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.